the Q&A functionality. This is really an opportunity for you to ask questions throughout the webinar, and we will be having 2 dedicated Q&A sessions where really we will try to do our best to take the questions live, but in case this is not possible, we will also try to answer some of those in writing. The webinar is being recorded, and the recording alongside the slides will be shared after the webinar. We will also share a satisfaction survey, and really that is an opportunity for you to share feedback with us to let us know how you felt about the webinar and whether you have any suggestions for improvement in the future. Let's take a look at the agenda for today. So what is it that you can expect to get out of today's webinar? After some introductory remarks by myself, I will pass the floor to Michaela Streibelt from the Helpdesk on Business and Human Rights. We are extremely grateful to have her with us, and she will be actually telling us all we need to know about the EU Corporate Sustainability Due Diligence Directive. So she has taken up the challenge of telling us everything in a limited amount of time, but hopefully we will be able to really go through the foundation of the directive. Then, as I said, we will foresee some time for questions and answers. And the latter part of the webinar will be dedicated to looking really at tools and programs that already exist from amfori, and it will be our very own Aubrey telling us a little bit about the programs, the products and services of amfori that can support companies with aspects of their due diligence. And then it will be Isabel Reichenbach from the German Partnership for Sustainable Textiles, who will talk about the PST tools and programs. And she will also be in charge of the Q&A and closing. Now, I wanted to quickly put this webinar into context. If we could move to the next slide, please, and pay tribute also actually to my colleague Francis, who has done quite some work in organizing a series of webinars actually on due diligence laws in practice, but focusing mostly on the German Supply Chain Act. And this is also an opportunity for me to express again really sincere gratitude to Isabel and the German PSD, but also to Michaela from the German Helpdesk on Business and Human Rights for really this partnership that has been ongoing now for more than 1.5 years, where we have really uncovered quite a lot of aspects of the German Supply Chain Act. And today's webinar, it's actually meant to switch gear since, of course, the Corporate Sustainability Due Diligence Directive is nearing finalization. We thought it would be an opportune moment to really start understanding the foundations, the basics of the CSDDD, and then the idea is to progressively in the future unpack and address specific aspects of CSDDD. Therefore, do keep following us to check out for additional webinars in the future. I also find it always helpful somehow to go back to the main drivers, right, of some of those legislation that we see emerging not only in Europe but also in other geographies. And I think the key tipping point is represented by the endorsement of the United Nations Guiding Principles on Business and Human Rights back in 2011, and that is a moment that has been so significant that also the OECD M&E guidelines were updated soon after the endorsement of the UNGPs to add a human rights chapter. So that very moment has actually generated a momentum for the legalization of the notion of due diligence as intended in international norms. I think the slide could be much busier than what you find on the screen if we were to include also other forced labor related instruments, but it's just really to give us the sense of this wave of laws that is coming. And surely the Corporate Sustainability Due Diligence Directive is one of the most comprehensive and potentially most ambitious of the latest generations of due diligence laws. If we could move to the next one, thank you very much, Else. This is also, and I wanted to go back to the main drivers and the tipping point, because I think it's important also to stress that the Corporate Sustainability Due Diligence Directive very much base itself on relevant international frameworks on responsible business conduct. And again, notably UNGP's, OECD M&E guidelines and ILO declaration. So that is really to convey the message that what CSDDD does is something not fundamentally new, and I think Michaela will take the time to tell us really exactly what it is that companies will have to do. But bottom line, I think it's really the risk-based due diligence and the notion of understanding how companies connect to impacts to people and the environment. If we could move to the next slide. So this is also just to give us a perception of the timeline, because we have been talking about CSDDD for quite a number of years now. The feeling is that it is already there, and it is almost there. So we need to still await a couple of procedural steps, notably the final endorsement by the Council, by the EU member states on the 24th of May, so in a few days from now, after which we need to await also publication in the official journal of the EU, and that is the moment at which the clock will start to tick, and member states basically will be given 2 years' time to transpose the text into national legislation. And from amfori's side, the transposition aspect of the directive is also an opportunity for member states to really strive for greater harmonization in the way the provisions will be transposed nationally. Once the transposition phase is concluded, we will have a staggered application of the directive, meaning that there will be different categories of companies that will have to start to apply the rules, with the first batch as of 2020, starting from 2027, a second batch in 2028, and a third batch of companies in 2029. Of course, the message, I think, needs to be still that companies are very well encouraged to start with due diligence now, and do not wait, of course, for the entry into application to get closer. That's all I wanted to sort of cover in terms of setting the scene and introductory remarks. And now really our stellar speaker, Michaela, over to you to tell us everything we need to know about the EU CSDDD. And thanks again for being with us.
Yeah, thanks very much for having me, and thanks very much for this great collaboration, which yeah, I think is filling a very important gap, providing this type of information to a wider audience in English language, and we're really, really happy about this long-lasting collaboration as well. Yeah, we have a lot to take care of now. This is CSDDD. The copyright is just for you when you're being handed the material, so you know how you can use it. Let's have a look at the next slide and dive into the oh yeah, sorry, I wanted to say some introductory remarks about the help desk, so you know to whom you're talking, but I'm not going to lose too much time on that. We're free of charge offer from the German government, in fact, funded by the German Ministry for Economic Cooperation and Development, and we provide for initial consultation, referral advice, and awareness raising. And on the next slide, you find a bit more, some more information in relation to our activities. And I don't want to lose too much time here. I've mentioned it in the last webinars as well. You'll be handed the slide, and you can see maybe in orange rather than in blue. They are hyperlinks. So feel free to check out our support services. I think they're really, really helpful. So coming finally to the key points. Yes, so the CSDDD really is a milestone in the context of business and human rights, building on the UNGP, and you will see if you followed the webinars in relation to the German Supply Chain Act that the CSDDD is a little bit different, but a little bit quite similar actually, and the CSDDD spells out a couple of concepts that are already based in the UNGP, already based also in the German Supply Chain Act, which is also based on the UNGP and the OECD guidance, but provides for more specific requirements and spells out things in more detail, and is closing a couple of gaps. But there are also some things that are a little bit different. So the CSDDD, this is not news, like the UNGP, like other due diligence laws, like the German Supply Chain Act, requires companies to implement a risk management system. And this risk management system can be divided into 4, 5, or 6 key elements. We're working with 6 key elements. So strategy and implementation, risk analysis, preventive and corrective measures. And this is clarified in the CSDDD, is disputed in relation to the German Supply Chain Act, including remediation. Stakeholder engagement, this is really key and central also in the Supply Chain Act, but was given its own article in the CSDDD. I think this is also a reaction to the implementation experiences, for example, in Germany, where stakeholder engagement is an aspect that companies are struggling with. Then complaints and notification procedure, monitoring and communication. The CSDDD also requires companies to adopt and implement a plan to combat climate change. This is something we look at in more depth later as well. The due diligence obligations of the CSDDD apply in the so-called chain of activities. And the chain of activities includes the upstream value chain and parts of the downstream value chain. We'll have a closer look at this as well. The due diligence obligations in the chain of activities apply to own operations, all controlled subsidiaries, and business partners. So this differentiation you might have heard of in relation to the German Supply Chain Act of direct, indirect suppliers, substantiated knowledge. This is an approach that the CSDDD does not follow. The scope of the due diligence obligations is similar, but a little bit different compared to the German Supply Chain Act. They relate to certain human rights and environmental obligations. The catalog of human rights obligations is more spelled out compared to the German Supply Chain Act. So a couple of protected legal positions that are hinted at in the German Supply Chain Act by means of reference to the international conventions and ILO standards. They are more specifically spelled out in the CSDDD, explicitly mentioned, but the catalog of environmental obligations is bigger, and we'll take a closer look at that as well. Same as the German Supply Chain Act, we're not talking about obligations of guarantee, but obligations of means. This means that outside of own operations, companies have to show an effort, attempt at addressing potential and actual negative impacts, but they don't always have to guarantee success. The CSDDD has a big catalog of support measures, both for obliged companies, but also other actors. So non-obliged companies outside or inside the EU, SMEs. And there's also some support for stakeholders. Civil liability, the CSDDD here takes a very different approach from the German Supply Chain Act, requiring member states to create a basis for civil liability in their domestic laws. Civil liability has been an issue that's been used, the word, as an empty shell of a word, derived of meaning and used to scare people off the CSDDD and off corporate due diligence. We will take a closer look at that as well to provide more objectivity and actually show that this is actually something that companies will benefit from compared to the current situation where companies already might be liable for damages that they cause. The CSDDD provides for control and sanctions. The member states will define, implement supervisory authorities that will control the act. They shall be equipped with adequate resources, and pecuniary penalties are possible in relation to the CSDDD and shall be based on the company's turnover. The maximum penalty possible shall be not less than 5% of the annual turnover of a company. Coming to the next slide, looking at the obliged companies. Interestingly, the CSDDD provides for obligations not only for EU companies, but also for non-EU companies. This is really helpful, I believe, because this will provide a level playing field. The criteria are similar, but a little bit different. For EU companies, both an employee threshold and a turnover requirement are used, and the turnover will be a turnover requirement in relation to the global turnover. For EU companies, this means at least 1,000 employees and a turnover of at least 450 million euros globally. There are different thresholds for companies that receive turnover from franchise or licensing agreement, 22.5 million euros and 80 million annual turnover and 80 million globally. And this also applies to ultimate parent companies if these thresholds are being met in the group as a whole. In relation to EU companies, there's only the turnover requirement, and this turnover must be generated in the EU. This is because it's very difficult to ascertain employee numbers in general, but even more so in relation to companies that are based outside of the European Union. You might remember from the different draft stages of the CSDDD that there was discussion in relation to lower thresholds for companies that are active in risk sectors. This is not part of the CSDDD anymore, and different from the German Supply Chain Act, the CSDDD's employee numbers are not counted per head, per person, but on a full-time equivalent basis, and non-standard forms of employment, temporary agency workers, and so on, are included if they meet the criteria of employment of the European Court of Justice. Yeah, having a look at effects created from the CSDDD on companies outside of the scope, very similar to what we've also covered very in depth in our webinar on the knock-on effects of the German Supply Chain Act. Since obliged companies must implement due diligence not only in their own operations, but actually in their chains of activities, this creates effects on companies outside of the scope, but also the CSDDD does not allow for risk shifting, so a mere transfer of obligations on suppliers is not permitted under the CSDDD. This already stems from appropriateness criteria, which we'll have a look at as well, but there's also some more specific criteria in the CSDDD that are intended to provide for protection of other actors in the chains of activities of obliged companies. In particular, in relation to the risk analysis, obliged companies should prioritize requests for information from the business partners where the negative impact is most likely to occur, or where the negative impact has occurred already. And the CSDDD also specifically provides for the protection of trade secrets. On the next slide, having a look at this chain of activities. So I've already mentioned it covers both upstream and only parts of downstream. Parts of downstream in this context means distribution, transport, and storage, but only if this is for or on behalf of the obliged company, so very reduced scope in relation to the downstream activities, and disposal is not included anymore. I also mentioned that there's no differentiation between direct and indirect business partners. As we know it from the German Supply Chain Act, this differentiation is substantiated knowledge, but obviously, other criteria might lead to a practical differentiation when it comes to implementing measures, since, for example, the ability to influence an indirect actor might be different, and also the contribution to a negative impact at an indirect supplier's level might also be different, and this might lead to a different threshold of what is expected from companies to do in relation to indirect actors. But generally, direct and indirect actors are included in the risk management, have to be included in the risk management system. And in relation to own operations and subsidiaries, all controlled subsidiaries are always part of the chain of activities. You might know from the German Supply Chain Act that there's this criteria to actually exercise decisive influence. And this is a very similar, but a little bit different, a little bit easier, because all controlled subsidiaries are included. So taking a look at the protected human rights positions. So I will not go through all of them, but you can see in orange, these are the ones that are explicitly mentioned in the German Supply Chain Act, and the ones in white are the ones that are not explicitly mentioned in the German Supply Chain Act, where it goes a little bit further. But these are obviously rights positions like right to life, prohibition of torture, inhumane and degrading treatment, that are not explicitly mentioned in the German Supply Chain Act, but included by means of this fallback clause. And very similarly, the CSDDD also has such a clause. So it requires it also includes as a protected position any reasonably foreseeable abuse of rights listed in the human rights instruments that are a part of the annexes, if it can be abused by a company and directly impairs a protected legal interest, and the human rights positions have to be interpreted according to international human rights law. Coming to the environmental positions, the CSDDD takes a similar approach to the German Supply Chain Act and includes specific prohibitions and obligations from international environmental agreements. And you can see that the scope is a little bit broader, or quite a bit broader than the German Supply Chain Act. Again, in orange and in white, orange the ones that are already included in the German Supply Chain Act, so Stockholm Convention, Minamata Convention, the Basel Convention, but there's a couple of more environmental agreements. And it is again included, similar to the German Supply Chain Act, the destruction of natural resources through pollution, including deterioration of soil and deforestation, if this leads to a negative impact on human rights, so deprivation of access to the means of living for humans. And additionally, there's also the plan to combat climate change in Article 22. So the key criterion, the crux of the CSDDD, similar to the German Supply Chain Act, is the criteria of appropriateness. Appropriateness defines what exactly is expected from companies to do in the context of their obligations of means, duties of effort. So companies cannot just show any type of effort, but there are clear criteria that define when companies meet what's required from them and when not. And this, in the context of the CSDDD, is called appropriateness. The German Supply Chain Act, you might remember, it's called effective and appropriate due diligence. Appropriateness is a little bit different, but quite similar to the German Supply Chain Act, and includes effectiveness criteria. So the general requirement on appropriateness means that due diligence measures must be capable of achieving the objectives of due diligence by effectively addressing adverse impacts, must be commensurate to severity and likelihood of occurrence, and reasonably available to the company, taking into account the circumstances of the specific case. The CSDDD clarifies that prioritization of adverse impacts shall only be done according to severity and likelihood of occurrence. In relation to the German Supply Chain Act, this was a little bit unclear because reference was made to all appropriateness criteria, but an interpretation based, like historically, on the UNGP and the OECD guidance and application interpretation according to the purpose of the provision also leads to prioritization having to be done according to severity and likelihood of occurrence. But this being required so specifically, I think is very helpful for companies because they clearly know what they have to do. There was a little bit uncertainty in relation to that in Germany. And I've mentioned that there might be differences in relation to indirect suppliers because the influence and contributions might be a little bit different. You have seen maybe that on the left-hand side, the appropriateness criteria are capable by effectively addressing, commensurate to severity and likelihood, and reasonably available. Ability to influence and contributions is not part of that. So ability to influence and contributions are not part of the general appropriateness criteria, but in relation to preventive and remedial measures, corrective measures, consideration of the ability to influence and contributions do play a role. And I understand this as limiting factors, for example, the ability to influence, defining what type of measures companies might be able to do, because depending on the influence they have, different measures might be available to them, and contributions limit what is expected as an effort from companies, what they have to do, looking at expenses companies have to cover in relation to measures. And these criteria, the general appropriateness criteria, are relevant for risk analysis, preventive and corrective measures. There's also the additional criteria and stakeholder engagement. Next, I want to come to contractual assurances. Contractual assurances, contracts, code of conducts play a huge role in the context of business and human rights. They are by far the most widely used tool of companies when it comes to implementing measures, implementing due diligence in relation to their suppliers. And I find the situation here a little bit unbalanced because on the one hand, we're seeing an over-reliance on contractual assurance, which alone are a relatively ineffective tool, ineffective measure. We need to look at appropriateness, which requires effectiveness. And on the other hand, we see reluctance of companies to use more effective tools or to combine contractual assurances with more effective tools, which is especially purchasing practices. We've covered this in depth in our webinar on responsible purchasing practices, but it is really central in the CSDDD because it provides for more specific requirements in relation both to contractual assurances but also purchasing practices. So I want to talk about this here as well. I've already mentioned the CSDDD does not allow for risk shifting. So companies cannot just transfer down their due diligence obligations to their suppliers, ignoring their capacity and thinking by means of a contract they can define risk-free supply chains and don't have to do anything further to meet their due diligence requirements. This is already not appropriate in the context of the CSDDD, but it's also specifically not allowed. Instead, companies should collaborate in light of a shared responsibility, sharing, providing for a balanced sharing of responsibilities, of risks, and of costs. Contractual assurances usually will be more effective when they're combined with other measures, in particular measures to verify compliance. And the CSDDD also suggests that companies can take recourse to indirect suppliers, also by means of contractual assurances to ensure, for example, adherence to the code of conduct or participation in a preventive or corrective measure. There's some more specific requirements in the CSDDD in relation to contractual assurances from SMEs. They shall be fair, reasonable, and non-discriminatory. There's also requirements in relation to costs for measures to verify compliance, audit costs in particular. These should not be covered by SMEs, and they shall be given the audit documents to use in relation to, for example, other customers of theirs, if the obliged company agrees or if they at least partially cover the costs of the audit. And obliged companies need to make sure if further support of the SME is necessary. We'll also look at the support for SMEs and protection of SMEs in the CSDDD a little bit more in depth, but in the context of preventive and remedial measures, it might be necessary that the obliged company financially supports the SME, and this is an obligation that exists, an obligation to do so if adherence to the code of conduct or participation in preventive or corrective measures jeopardizes the viability of the SME. The CSDDD also clearly embeds the principle of enabling before withdrawal and not only responsible exit, but actually responsible disengagement. We will look at that as well. Exit is only a last resort also in this context, but companies have to do a couple of things in addition to that. And in relation to contractual assurances, companies, the Commission shall provide for model contract clauses that can be used on a voluntary basis. This, I'm sure, will provide for lots of, will reduce the administrative burden that is created by a very fragmented situation of loads of differing codes of conduct that companies need to assess and then make sure that they also adhere to it. Having uniform clauses, I believe, will reduce the administrative burden, and there's also a couple of projects and working groups working on clauses like that before even the Commission has taken up this work. There's a working group working on model contract clauses really tailored on the CSDDD and the contract law of different member states. And I believe it makes sense for companies to check out these clauses and see to what extent they can integrate them in their practices. Let's have a look at the principle of enabling before withdrawal and responsible disengagement. I've already mentioned this is only a last resort. And if it says on the slide, if measures are not successful, this means if in case of severe violations, companies cannot effectively appropriately address the negative impact, they shall not enter into new business relationships with the supplier or extend existing business relationships. And if there are reasonable expectations of success of such action plans, they should implement enhanced or preventive or corrective action plans using the company's leverage. And if there are no expectations of success of such an enhanced preventive or corrective action plan, they shall assess whether they should responsibly disengage, which we have called now responsible disengagement assessment. But what's really clear in this context is the CSDDD takes a very clear stance, similar to the German Supply Chain Act, to prioritize preventive and corrective action over the termination of business relationships. And this is so important because the threat to terminate business relationships might increase leverage. It's important in the context of contracts and code of conduct to have this option as part of the code of conduct or contract, but it might also create negative effects on due diligence in a context where suppliers fear that they will lose an important business partner or have other disadvantages. When problems occur, they might try to disguise the situation on the ground, basically sabotaging efforts to implement appropriate due diligence. And the other reason is that terminating business relationships, suspending business relationships does not effectively and appropriately address negative impacts. It simply removes these impacts from the supply chain. So typically it does not improve living and working conditions of people that are aimed to be protected by the CSDDD, but instead creates further risks for more negative impacts because, for example, the supplier has lost an important customer and is not able to pay wages. Let's take a look at the responsible disengagement assessment. I think this is really interesting that the CSDDD provides for so much clarity for companies in relation to the steps that they have to take before they disengage from a supplier. So what they basically have to do is they have to compare the situation, what happens if I stay and what happens if I go. And they are only allowed to go if what happens if they stay is worse than what happens if they go. And in what happens if I go, they have to include measures with which they would address negative impacts resulting from the suspension or termination. So if they can, for example, appropriately address negative impacts arising from the termination and including these measures, what happens if I go would actually not be worse than what happens if I stay, they are allowed to go. But if they come to the conclusion that the situation of termination or suspension is worse than the situation of staying in the business relationship, they shall stay in the business relationship and report this to the competent authority. And this is really interesting because I know in practice companies take a very, very different approach, also because of, for example, fear of reputational issues. But it is really important, I believe, to make sure that the living and working conditions are effectively addressed in an appropriate way, which is not possible when a business relationship is terminated. In any case, there are situations that are too severe and there's no prospect of success. I would say, for example, in the context of state-orchestrated forced labor, there's very little room for maneuver for companies. This would be, for example, a case where I would think that companies should assess whether they should disengage, and probably disengagement would be the better solution. In case of suspension or termination, companies would have to implement these measures that I mentioned, that they are included in the assessment. We're not seeing the slides anymore. I'm not sure what's happening here. So they would have to implement measures with which they address the negative impacts resulting from termination or suspension. They would have to give reasonable notice to the business partner and keep this decision under review. On the next slide, and we're seeing the slide deck in this presentation mode, I want to talk about purchasing, design, and distribution practices. And these are part of both preventive and remedial measures. The German Supply Chain Act also talks about purchasing practices in the context only of preventive measures. Purchasing, design, and distribution practices might have to be changed in the context of preventive or remedial measures in a way that they do not contribute to negative impacts on human rights and the environment. And this means, first and foremost, pricing strategies. Prices should consider direct and indirect labor costs, including costs for sustainability, living wages, and income. Other aspects that might be really helpful in adjusting in order to not create negative impacts on human rights and the environment are questions like lead time, short-term changes, and in general, focusing on more long-term working relationships with suppliers, because more long-term working relationships might provide the certainty that they need to make more long-term investments into, for example, operational safety and health, building safety, but also wages. If a supplier starts paying higher wages and then they lose the customer, they're uncertain whether or not they will have an order next month. This might create problems in relation to their workforce that is expecting the higher wage. Such practices, purchasing, design, and distribution practices, can also be used to incentivize suppliers to improve. For example, companies could use a contract, or could use a more long-term contract as a reward, or a bigger order volume in the future as a reward for good, for sustainability performance, for improvement that's requested from the suppliers. So you can say something like, okay, I'm going to make an order here. I have these concerns. I want this to be changed. And then if I see changes here, improvements, next time I will give you a more long-term contract, and I will make sure that I'm going to order from you the next half year or so. But what's important to note is that big improvements usually are visible in relation to contract lengths of around 5 years, because this gives supplier really the stability that they need to make these more long-term investments. We're still seeing the presenter mode, and maybe it is an idea to go to slideshow, set up slideshow, and there you can remove a hook for the presenter view. Or you go to slideshow, and then on the right side at monitors, remove the hook of presenter view.
Thanks, Michaela. I know that Else is working on it, trying to fix it. So let's see if it doesn't work. Yeah,
Okay.
we'll do our utmost to continue.
Very good.
With the presentation. Thank you. Let's give it maybe 1 minute and see if it works.
Yeah. If you go on slideshow, no. Can you close it again? Fantastic. Wonderful. All right, let's talk about audits and the CSDDD. Obviously, measures to verify compliance play a central role, and their relevance in this context is likely to grow because of the CSDDD. They already play an important role for companies when implementing due diligence practices, because they're a very important tool, for example, as a resource for the risk analysis, for preventive and remedial measures, corrective measures, and for monitoring and communicating, or rather monitoring, so for effectiveness assessments. The CSDDD, similar to the German Supply Chain Act, also sees audits as an important tool, but alone as not sufficient to comply with due diligence obligations. So they're not an important instrument, but by using audits, by buying certified products or resources alone, companies cannot tick the box and have not fulfilled their due diligence obligations. And it's really central that the CSDDD also takes this approach to audits, because in practice there are many, many problems with especially the quality of audits. And I see this issue as interrelated with poor contract design, because we're facing a situation where suppliers go through great lengths to hide the situation on the ground because they're fearing disadvantages. They're also fearing being left alone with addressing these problems. They maybe being paid a purchasing price that is not sufficient to cover costs, have signed a code of conduct that put them in breach of contract in the second that they signed, and then now they have to worry that they will lose their customer if they find out what's actually going on. And companies, some suppliers will create wage documentation that is completely forged just for the purpose of the audit. There's reports of fake workers being bussed to work sites to pretend to be working there on the day of the audit to be then responding to the questions of the auditor in a positive way. So we need to be really careful when looking at these documents and also when only using them alone. And this is also why stakeholder engagement is such an important element of the CSDDD, because with stakeholder engagement, companies can correct the results that they get, for example, from the audit, but also from the questionnaire. The CSDDD has some requirements in relation to audits, and the Commission will provide some support for companies in relation to audits. So audits shall be objective, free from direct and indirect conflicts of interest, and auditors should refrain from any action incompatible with their independence. Companies shall make sure that the auditors should have the right experience and competence for the purposes of the audit, which requires experience and competence in environmental and human rights matters, depending on the nature of the impact that has to be assessed. And auditors should be accountable for the quality and reliability of the audit. And the Commission will issue guidelines on fitness criteria and methods to assess the fitness of auditors, and guidelines to monitor accuracy, effectiveness, and integrity of audits. And this guidance is supposed to address the shortcomings of ineffective audits and fill this gap, hopefully leading to more high quality audits, being around improving companies' overall due diligence efforts. The CSDDD also has some specific requirements in relation to industry and multi-stakeholder initiatives. Similar to audits, industry and multi-stakeholder initiatives play a role in relation to many different due diligence obligations. They are important in relation to risk analysis. They're also really important when it comes to implementing preventive and corrective measures, but also when it comes to, for example, monitoring and communicating, and also when it comes to the complaints and notification procedure. And initiatives can support these due diligence efforts, but alone might not be sufficient to fulfill the due diligence efforts. They play an important role when it comes to increasing leverage. Companies can join or use relevant, for example, risk analyses carried out by initiatives after assessing appropriateness of these analyses to support their due diligence. And the Commission, similar to the audits, the Commission and the member states shall support companies by providing information on initiatives, and the Commission will issue guidelines on fitness criteria and methods to assess initiatives. Coming on the next slide to remediation. I'm seeing I'm really short on time, so I hope I will be able to cover everything. On the next slide, please. So I think we have a little bit of a technical problem here.
Indeed, it seems that there is an issue. Maybe can you try to still talk to the slide, if you can, while we try to put them up again.
So I've mentioned that remediation is the CSDDD clarifies that remediation is part of corrective measures. Companies may have to remediate in case of actual negative impacts if they caused or jointly caused a negative impact. The obligation, so I'm sure you know of the differentiation between causing, contributing, and being directly linked to a negative impact. And companies are only required to remediate when they cause or contributed to a negative impact, and they are not required to remediate when they are only directly linked to negative impacts. So in the case where a business partner has caused the negative impact alone. In this case, obviously, voluntary remediation is possible, and companies can use their ability to influence the business partner so that they provide remediation. And jointly contributing to a negative impact is not only met when there's an equal implication of the company and the other actor in the negative impact, but covers all cases of causing the impact together with others, including facilitating or incentivizing. Okay. Coming on the next slide to stakeholder engagement, I've already mentioned that stakeholder engagement is even more pronounced in the CSDDD. The CSDDD has clarified a lot in relation to the procedure of stakeholder engagement and has given stakeholder engagement its own article to make it even more visible to companies that stakeholder engagement is very central to due diligence. Stakeholder engagement is necessary for risk analysis, the development of preventive and corrective action plans, and also the decision to suspend or terminate a business relationship, and the development of qualitative and quantitative indicators for monitoring. Companies must provide for relevant and comprehensive information to stakeholders so that they can participate meaningfully in the stakeholder engagement in the consultations. Companies might have to additionally consult experts if stakeholder consultation is not reasonably possible to the extent that is necessary to comply with the purposes of the CSDDD. And companies must identify and address access barriers to ensure that stakeholders can actually participate in the consultation and not subject to retaliation or retribution. And stakeholder engagement is also one of the elements that is possible to be conducted through initiatives. I wanted to talk quickly about the climate plan, the plan to combat climate change. This is a best effort obligation to ensure that business model and strategy are compatible with the transition to a sustainable economy and limiting global warming to the 1.5 Paris goal and the objectives to achieve climate neutrality until 2050. Companies need to adopt the plan and implement it, updated every 12 months, but the supervisory authorities only assess the adoption and the content of the plan, not its implementation. The plan shall include time-bound targets, both for 2030 and 2050, including where appropriate targets for scope 1, 2, and 3 emissions, the description of decarbonization levels and key actions, explanation and quantification of investments and funding needed for the implementation of the plan, and a description of the role of administrative management and supervisory bodies. Companies that are already subject of the CSRD and are already reporting a transition plan according to the CSRD are understood to have complied with the obligation to adopt a plan. Taking a look, I'm almost at the end of my slides. Luckily, I'm already over the end of my time. At civil liability, the CSDDD requires companies to implement a uniform liability norm, which creates legal certainty and clarity. And this is because right now, companies might already be liable for damages resulting from their activities in their supply chains, irregardless of Article 29 of the CSDDD, but the current situation for companies is very difficult to understand and exposes them to difficult liability risks, uncertain liability risks that are very difficult to foresee, because typically companies are liable according to the law of the place where the damage occurs. In reality, this is a little bit more complex, but this is the rule of thumb. The main rule in relation to the applicable law, and this means that companies are facing liability risks according to jurisdictions all around the world, whereas the CSDDD will create a uniform rule that is almost universally applicable. So all courts of the European Union will have to apply this rule, irrespective of the place where the damage occurs. The rule, in my opinion, is also taken a very balanced approach to liability. Companies shall not be liable for damages created solely by others. They're not liable for appropriately deprioritized negative impacts. They're only liable if they caused the damage intentionally or negligently, and this was caused by the failure to take remedial or corrective action. And also in relation to compensation, the CSDDD clarifies that there shall be no overcompensation, so no overcompensation, for example, by means of punitive damages. So before I come to the end of my presentation, I want to take a quick look at support and relief measures, because the CSDDD takes a very holistic approach there and provides for very broad support and relief measures. For obliged and other companies, I've already mentioned the model contract clauses that can be used on a voluntary basis. It's not allowed to risk shift, so no mere transfer of obligations down to the supply chains. The Commission will issue different guidelines. There will be general and sector-specific guidelines in relation to specific negative impacts. I've already mentioned the guidelines in relation to fitness criteria and methods of assessments for audits and for initiatives. The Commission will implement a single help desk to provide for support, and member states shall provide support through websites, platforms, and the Commission here can provide for additional support offers. I've mentioned that trade secrets shall be protected, and in relation to the risk analysis, that companies should prioritize requesting information from the business partner where they expect the impact to occur, instead of the intermediaries in the supply chain. And lastly, I want to take a look on the next slide on support and relief measures specifically for SMEs. Support is expected from member states. It's allowed within the rules of state aid to financially support SMEs, and there's protection from disproportionate requirements. I've already mentioned that contractual assurances from SMEs must be fair, reasonable, and non-discriminatory. SMEs should not cover for the cost of the audit. They shall be allowed to use the audit documents. Obliged companies shall financially support SMEs, and they have to support SMEs financially if compliance would jeopardize the viability of the SME. So with this, I come to the end of my presentation. Thank you very much. I'm very sorry that I used way too much of my time, but I'm really excited to hear questions.
Thank you so much, Michaela, and I think that was very much needed. So you gave a very comprehensive overview of the CSDDD, and you also draw some very interesting parallelism with the German Supply Chain Act. And actually, maybe we can kickstart with a couple of questions around the German Supply Chain Act, in particular, whether the German Supply Chain Act will need to be adapted as a result of CSDDD.
Yeah, so the CSDDD is a directive which must be transposed. You've mentioned this in your presentation, Valentina, must be transposed by the member states into their national laws, and where there's differences. So Germany and France are the two states that already have due diligence legislation, mandatory due diligence legislation, and they will have to adapt where there are differences between the CSDDD and their national laws. The CSDDD is not fully harmonized, which means the CSDDD describes a bottom line of a minimum that member states have to do, but member states are allowed to go further than that. But where the German Supply Chain Act, for example, is missing some things from the CSDDD, or is below the threshold defined by the CSDDD, the Supply Chain Act will have to be adjusted.
Thank you very much for clarifying this very important point. There is a question, Michelle, regarding the staggered application of the rules, starting from when companies will have to do what. Is there anything more that you could speak to, in particular, looking at the first batch of companies that will have to apply the rules as of 2027? The question, for instance, is, does this mean that before this date, companies should already start documenting and monitoring activities? Can you tell us a little bit more about this aspect, please?
Yeah, I mean, it makes sense for companies to start preparing a little bit ahead of time, because implementing due diligence processes is really difficult to do overnight. But companies will not have to provide for documentation and report in relation to time before they entered into the scope of application. So no company that falls under the CSDDD or the transposition laws in the member state will have to provide for reporting on due diligence for 2026, 2025. For German companies, it's a little bit different because there are a lot of companies already in the scope of the German Supply Chain Act, and here we need to wait what happens, what the German legislator is doing with that.
Thank you, Michaela. And can we be a little bit more precise in terms of exactly as of when? We have a couple of questions there. Will it be 1st of January 2027 or Q2? I guess that this is very much linked also to the publication in the official journal by the EU, but maybe you can speak to
this is linked to the publication in the official journal of the EU, because the directive enters into force 20 days after the publication. I believe this will be sometime in the next couple of months, and 20 days later it will enter into force, and then 2 years after that the transposition time of the member states will end, and it's all tied to the entry into force, which is tied to the publication of the official journal. So it will be probably sometime mid-2027 when the obligations start.
Very clear. Thank you very much, Michaela. Regarding the obligation of means and obligation of results, we have a couple of questions there. So if it's about impacts outside of own company, does it mean then that there is an obligation of creating results if it's not the company causing the adverse impacts? Can you maybe try to clarify, depending on the involvement level, if we talk about obligation of means or of results? Thank you.
Yeah, so the appropriateness criteria define what exactly is owed as the obligation of means. And this also might be, depending on the degree of involvement in the negative impact, that a company might owe a complete correction of the actual negative impact if an obliged company has alone caused and is only responsible for a negative impact. It's a little bit difficult to imagine scenarios at a supplier's level where you would say there's only involvement of the customer, of the supplier, and there's no degree of involvement of the supplier. I find this a little bit difficult because at supplier's level, there's usually some degree of involvement of the supplier. But let's say in a context where the obliged company and the supplier have caused a negative impact, let's say 50-50, then I understand the contributions limiting what is owed from the company as to only 50% of the corrective measure.
Thank you, Michaela. Purchasing practices, responsible purchasing practices, we talked about it. You mentioned that this is actually listed as one of the appropriate measures. We talked about responsible contracting. Can you explain a little bit more perhaps about the role that responsible purchasing practices will play specifically in CSDDD? Thank you.
Yeah, so this is a little bit looking into the future, being a little bit speculative, but we all know, I believe, that purchasing, design, and distribution practices are very central when it comes to looking at how do companies contribute to negative impacts. By what way are they linked to negative impacts, and what means are available to companies to address negative impacts. In many situations, the ability to influence the party directly responsible for negative impact is very limited because it's a supplier, it's outside of the realm of a company where they can just decide what happens. And then even in some cases where there's no ability to influence a supplier, the one thing that I always have at hand, the one measure that I can always use is my own behavior. I can always change my own behavior. Obviously, there's limits to that as well. When I look at purchasing practices, design, distribution practices, I mean, considerations of price also limit what companies can do. They cannot just give everyone more money without looking at limitations, obviously. And purchasing practices, design distribution practices, but in particular purchasing practices are so important also because when looking at appropriateness, which requires companies to effectively address the negative impact, it's in many cases not possible to effectively address negative impacts without looking at root causes for negative impacts. And in many cases, I will not be able to effectively address a problem if I don't remove the cause of the problem. And if the cause of the problem is something that I have done, it will be very difficult to act effectively, meaning appropriately, without actually stopping what I'm doing here. And so what we're seeing in many cases, I mean, there's very positive examples in relation to the implementation of the German Supply Chain Act, but we see lots of tick boxing practices as well. Companies trying to contract away their responsibility, making their suppliers sign an everything is perfect agreement, with which they also take responsibility for everything, announcing that they shall, the contract will be terminated if there's the smallest problem, but they don't address their own pricing strategies. And they're paying a price that makes it impossible to pay wages, to provide for operational safety and health, have good working hours, and so on. So then you can have the nicest code of conduct in the world. If you don't address this part of the problem, nothing is going to change. And yeah, this is something that's really difficult to do, in particular for suppliers that only buy a small percentage of the volume produced by, for companies who are only buying a small percentage of volume produced by a supplier. And this is where collective action becomes so important, especially through initiatives, because companies can say, okay, this is what we're expecting, but all of us will now look at our pricing strategy in this way. And this creates finally the leverage to really look at changes, lead to changes on the ground.
Thank you, Michaela. We have a few questions regarding audits. One question, for instance, is about how to interpret the fact that auditors should be accountable for the quality and reliability of the audit. Then maybe we can sort of merge this question also with the timing of the guidance expected by the European Commission and the fitness criteria.
Yeah, the guidance, the timing, I would actually have to look up. I think it's planned for 2027 or something, but so we still have a little bit of time to wait, but I'm not 100% sure. Yeah, in relation to looking at accountability of auditors, this is something that actually civil society has recommended many times over the last years. And yeah, this is something that would create an incentive for the auditor to provide for a high quality audit with reliable results, because when the auditor is liable for mistakes in the audit to, for example, the obliged company who paid for the audit, saying, okay, if there's problems now, we will take recourse to you and you have to pay a fine, you have to pay damages and so on. This will incentivize the auditor to provide for, to do their job well. In the past, there's been many cases of very serious industrial disasters that, on sites that all have been audited very shortly beforehand, highlighting the problems in this field. And I know that the auditing industry is also reacting to that. There's some civil lawsuits, for example, one pending in Germany in relation to the Brumadinho dam that broke in Brazil, where thousands of people have filed suit against the auditing company. And this is also obviously something that puts auditing companies under pressure and incentivizes them to do better. React to that, but also having a clear liability, responsibility relationship to the company ordering the audit is something that would incentivize them to improve as well, and would also be something that companies can use to cover their bases. They are relying on an audit. They worry that they have to now pay damages because of the civil liability clause. They relied on the audit, and they tell the auditor, okay, I want to rely on you, but if this goes wrong, you have to cover this.
Thank you, Misha. And I know that we are going a little bit beyond what we had foreseen for the Q&A, but I think it's important. We have very many questions, so we can maybe take a few more. So we said that audits are not enough. So there is a question, what else can be done? And is it possible to utilize self-assessment or other types of assessment not related to audits? Because this is what, for instance, is being done by the company in question that talks about onboarding questionnaire, survey. Would you be able to speak to some of the other assessment types and whether they would fit for the purpose of CSDDD? Thank you.
Happy to do that. I mean, what I find really interesting is that companies overly rely on information gathering on rights violations caused by suppliers and ask suppliers, do you cause these rights violations? This is per se not a very effective method. Audits and self-assessment questionnaires can be an important part of the puzzle of information gathering, which obviously is part of many of the other due diligence obligations. But we really need to look at the quality of the questions and the method of assessment in relation of questionnaires, and also in relation to software tools that use questionnaires, for example, have an automated mechanism to send them and receive them. Oftentimes the design of the question is so poor. I've seen some tools that have used the protected legal positions from the German Supply Chain Act and put the phrase, "I certify that" in front, and then you can click, really tick the box literally, and tick, "I certify that this is okay, I certify that this is okay." And I've seen questionnaires also from audits where they ask, "How many children are working at your site?" I mean, okay, I don't think that this is very helpful, because everybody knows what's the right answer. And what's really important, and I think this is why stakeholder engagement is emphasized so strongly in the CSDDD, is that information gathering should not only be based on information from the supplier, but also should be based on information gathered from potentially affected persons, from stakeholders, from rights holders. And there's many different ways that this can be done. There's organizations that include stakeholder engagement into their audit procedure, for example. There's NGOs that have ongoing, continuous stakeholder engagement in a continuous forum, which provides for enough safety and certainty of the stakeholders with which they talk, and they provide for documentation created by that to companies. For example, this is the NGO Electronics Watch that I think has a really great method in relation to that. And then companies can, for example, look at the audit results and look at the results from the stakeholder engagement, and then identify gaps where they think, okay, there's a contradiction here. And the contradiction shouldn't be, okay, yeah, but they said it's fine at the end, but the contradiction should be, okay, I need to investigate further, or I need to assume that there actually is a problem, because I mean, the workforce is not going to say, I have a problem here just to annoy their employer. So this is oftentimes companies see information gathering as an escalative step, and they see the audit as the best method. But this really depends on the quality of the audit. Audits are typically announced, which really reduces the effectiveness a lot. And then there's other information sources that should be used, especially information from stakeholders.
Thanks, Misha. And in the interest of time, maybe one final question about the reporting, because we talked about CSRD and CSDDD. Yeah. So there was a question, how can we do the reporting? Is it via CSRD? Yeah. And can it be done separately, environment and human rights?
Yeah, I didn't cover reporting at all. I'm really sorry about that in my slides. And the CSDDD does not provide for reporting at all, but only for communicating. And communicating companies, the article on communicating only requires companies to communicate publicly, only if they're not in scope of the CSRD. So all companies that are in scope of the CSRD, they don't face any additional reporting or communicating requirements from the CSDDD. They only report under the CSRD. And companies who are not part of the CSRD shall publicly communicate. And then there's some criteria they shall publicly communicate on how they do due diligence, how they've implemented it, the results from their risk analyses, the measures that they've implemented, the effectiveness assessment, and so on. And there's some news in relation to that, in relation to the German Supply Chain Act, because the German Supply Chain Act, for some time at least, had this like double situation of CSRD and reporting to the BAFA using the questionnaire under the German Supply Chain Act. And this is a situation that will be harmonized into companies will have a choice whether they use the BAFA questionnaire or whether they use the CSRD. This is something that's both available for companies that are in scope of the CSRD and those who are not yet.
Thank you, Misha. Now I would like to hand over to Isabel. She will be moderating this second part of the webinar. And maybe, Misha, we can try to answer some of the other questions in writing. Over to you.
Yes.
Isabel.
Hello. I'm very sorry. I hope you can hear me. Unfortunately, I had some technical problems. This is why my video isn't working. But I'm also happy to take part in this webinar on part of the Partnership for Sustainable Textiles. And what we have envisioned for the second part, you know this also from the past, is that we would like to introduce you to some of the tools basically we have, or the offers we can make. And I will do this first for the partnership and then also hand back to amfori. For those of you who have participated, and also please keep and ask your questions on what we present now. As Valentina said, I'm sure Michaela, she will answer the numerous questions that are still open in the Q&A via writing, and we'll make sure to also answer some questions maybe as a follow-up. So for those of you who have participated in the past, you already know that, and please go to the next slide. The Partnership for Sustainable Textiles is a multi-stakeholder initiative, and just having also heard what Michaela said about the role that initiatives can play to support due diligence as envisioned by the CSDDD, I'm happy to tell you a bit more about the work that we're doing. As a multi-stakeholder initiative, we bring together stakeholders from civil society, from the private sector, and also the German government. And so basically this is key to our work, but then also knowing about what's going on in the regulatory environment. We in the future want to put an even greater focus on the topic of stakeholder engagement, and more precisely also on the engagement of rights holders. And this is what our steering committee just decided in April, so that we put more of our resources and network to use to include this perspective of rights holders within our processes. I think you can actually skip the slide, go to the next one directly due to the limited time. So yes, I don't know. Oh yeah, I hope you can see that full screen again. There was something wrong with my screen, I think. But what I wanted to highlight are basically two parts of the work that we're doing. One focusing on more the preventative actions, and then on remedial actions. And for preventative actions, I want to highlight again the trainings, the guidelines, but also peer learning we do have in place in order to support our members in embedding responsive business conduct within their own operations, but also towards their suppliers. So there are a number of resources that members to the PST can access also those that are or just become more relevant maybe due to the CSDDD, such as on responsible exit, but then also on purchasing practices. I mean, we've heard from Michaela also about the relevance of that. And then I will talk about this a bit more in a second. What is also key to our work is that we implement joint projects with our stakeholders, with our members in production countries. And on the remedial actions, and I also have talked about this in sessions in the past, what we do here is we don't have our own, or we don't operate our own grievance mechanisms, but here we collaborate with other initiatives, other stakeholders in the industry. Also, to name amfori, here we have our basically own project with amfori and Fair Wear, but then also members of the partnership can also use basically the Fair Wear grievance mechanisms. So this is also something I would like to point out. Please go to the next slide, because I brought you also an overview of the current partnership initiatives that are in place. This is what I just mentioned before, under the preventative actions. So basically coming back to this joint effort here, you can see the partnership initiatives that we have running right now. And the key to this is that really our members become active in production countries and address relevant risks in their supply chain based on their individual risk assessment. And if this sounds or if this is of interest to you, please feel free to reach out to me and hear more about those projects that we're implementing on the ground. I'm happy to share more. And then also, as many of you might be aware, the partnership secretariat for that I'm working as a project manager is also part of a larger GIZ project that's funded by the BMZ. And hence, I also wanted just to quickly bring another instrument to your attention, namely the green button that can also, or that also supports companies in meeting their due diligence obligations. I don't know whether you're familiar with that, but it is basically government-run certification combining due diligence requirements for companies and social and ecological requirements for certified products. And it basically offers companies a great preparation for due diligence legislation. If you go to the next slide, here's a broad overview of what the green button does. So besides this really holistic due diligence requirements that are part of the certification, it also offers improved risk management. So this is something I think I want to highlight, and that also becomes so relevant when we look at the legislative environment. So also, if you're interested to learn more about the green button or the PST, reach out to me. And in the interest of time, so we also, Valentina, shall we first maybe do?
We are going to do first Aubrey. Yes. So just
yes.
time to go back, and then we see whether there are questions. Thanks a lot, Isabel.
All right. Thank you. Yeah, my name's Aubrey. Nice to meet you. I'm product manager for social at amfori. And yeah, I'm happy to give you a brief introduction about amfori and about how our tools and services can support members, companies with their due diligence journey. So briefly regarding amfori, for those of you who don't know us, we are a membership-led association founded in 1977. And the most known flagship product, amfori BSCI, has been in the market for more than 20 years. And today we support our members with their environmental, social, and governance due diligence journeys by offering practical solutions and tools. So we've moved on from only social to a more holistic due diligence approach for our members. We have more than 2,400 members in 50 countries, so different members' needs from 27 different sectors, mainly in the garment and textiles industry, but also household goods and electronics. And as amfori, we are present in 17 countries. So we have local network representatives from the US to Australia who can support our members and their business partners with the local context in local language, which is also, of course, a great benefit for our members in their factories. And we partnered together with 13 monitoring partners who are an independent party who can conduct assessments in factories worldwide. 80% of our factories that are registered on the platform are based in China. And so in the supply chain of our 2,400 members, we have registered over 50,000 factories, active production sites, with a workforce of more than 9 million workers in 110 countries. So yeah, amfori can have a big impact on responsible supply chains. And one of our service offerings is capacity building. So we offer trainings for members, for business partners, not only in English, because as you can imagine, some factories management are not fluent in English. So we offer them in local language in the country of where the factory is located, main sourcing countries, as one of our service offerings. And yeah, thank you. On this slide, I want to briefly show you how the product and service portfolio fits in the due diligence journey of a member, because sometimes due diligence can be quite an abstract concept or can be perceived as quite abstract, but with the tools that and services that I'm presenting now, I'm briefly showing you how this fits into the 6 steps by the OECD, so the 6 due diligence steps for responsible business conduct, and we'll go through it briefly. So step 1 in the OECD guidelines is to set up a system. So with amfori BSCI, amfori BPI, we have a set of principles that are aligned with international regulations and guidelines to set up a code of conduct and embed it in their business responsibly. So the first step would be the implementation and the embedding of the code of conduct for the social, but also for the environmental. And as Michaela already mentioned earlier, like it's not enough to just simply sign a code of conduct, but it really has to be implemented and embedded and cascaded in the supply chain. So the sharing with direct and indirect business partners, ideally, the cascading of the entire supply chain is done, and processes and policies are implemented also to verify compliance with the code of conduct. So it's really a big step in the very beginning. And once the setup of the code of conduct is done, one can move to the second step, which is the identification of risk and the identification of impact as well. So here, amfori has the ESG risk compass, which is a great starting tool to identify risks in the supply chain, environmental risks, social risks, but also governance risk related to a country, and the assessment of the severity of the risk. For example, if we look at social indicators, like what is the level of risk on forced labor in a certain country, or what is the level of risk for climate change in country XYZ for a certain time frame. So that's a good starting point. And with the support of the amfori sustainability platform, we enable through amfori BSCI and BEPI supply chain mapping. So in order to identify risk in the supply chain, one has to map the supply chain. So register all the business partners, have it on one platform, have an overview in which country, which classification do they have. And amfori is also working on a multi-tier transparency approach. So as a member, you would be then also able to identify and register your other companies which you're working with, who might work with the factory. So intermediaries, importers, then trading companies, and so on and so forth, to really identify the risks in the supply chain. And once we reach the factory level and they're registered on the platform, we can start with the initial risk assessment for environment based on the type of production the facility does. So for example, a shoe producer might have another environmental risk assessment need as an electronics producer, for example. And the same thing we can do for social products. So risk assessment, first self-assessment questionnaire for the factory on social themes. And it was mentioned that stakeholder engagement is an important part of identifying risks. Here on the amfori sustainability platform, we can look into what previous data of a factory is available on the system. Were there audits conducted on site previously? What were the findings of those audits? Were those audit findings remediated? Have there been any reports on workers' grievances through the Speak for Change mechanism? Is there any data available there? Or even have there been reported serious human rights violations reported in the factory through the zero tolerance mechanism? So this is all data and information that a member can use to identify and assess the risks in their supply chain. And number 3, to stop and prevent. In the due diligence steps, number 3 here, we focus on capacity building, really building up the knowledge and expertise of the factories in sourcing countries for free in their language that they understand. To give you a few examples of our free course offerings, especially for business partners, is how to set up an environmental management system, how to set up a social management system. For members, it would be how can we really work with audit reports effectively, how can we implement due diligence in our supply chain, and so on and so forth. So through our academy, is accessible to members and business partners. There's a whole range of offerings to support this prevention and capacity building in the supply chain. If we move on to the fourth step on verification, so here one tool is, of course, the amfori, the audit, the amfori BSCI social audit, where an independent third party comes into the factory and verifies based on the 13 performance areas on the fulfillment. And not only the verification is important in this step, but also the follow-up, the continuous improvement. What will happen after a report was conducted? Which findings are there? How can we support the factory or how can the members support the factory on remediating those findings for environmental and for social as well? And ideally, if there is a finding detected, there is remediation and a follow-up conducted within the time frame, so that we can assure that continuous improvement is done and that findings are remediated if they occur. And after that verification step, we move on to reporting. So here, members are required to report on their due diligence efforts. And through amfori Insights, members have access to their aggregated data, aggregated supply chain information, and also supply chain performance on their monitorings, on continuous improvement, and which can support members on their reporting journey. We also have amfori Sustainability, which is an ESG due diligence reporting program, which will also contain data from amfori BSCI, amfori BEPI. So every supply chain data that the member has included on the systems will be used and can be used in a modular way for their reporting requirements. And to the 6 steps in the due diligence journey of a member, access to remediation. Here again, amfori Speak for Change, so the workers' grievance program, where we are active in 5 countries. Still more are to come, and where workers, whistleblowers, other representatives can raise a grievance, and where amfori can facilitate through collaboration on appointing an investigator and to facilitate remediation for the worker. So that was a brief overview of our product and service portfolio. Also I want to briefly mention amfori advocacy. Also one reason why we have this webinar today. So our advocacy team is in close collaboration with governments and stakeholders to also be up to date with the current legislations, and to also give that input to us, to the product teams, to make sure that that we know what to do and what is required and what we else can do for our members. And then just to finalize on the next slide, if you want to learn more about our tools of our services, please join us at the annual event. It will happen on the 4th and the 5th June in Brussels. If you're a member, please join us on the 4th of June, which is for members only. We'll have a deep dive on the risk assessments. We'll have a deep dive on audit integrity. So we'll have a social workshop on there, and on Sustainability. And on the 5th of June, which is open for everyone, we will further talk about due diligence in practice and also reporting. So if you haven't registered yet, please join us in Brussels. And that's it from my side. I'm happy to answer any questions.
Thank you. We're actually running out of time as always, I'm afraid. But I see there's still a number of questions out there, and we will try to answer some after the session. And with 1 minute left, I want to thank all of you for participating. I want to thank Valentina and Aubrey from amfori and Michaela from the help desk for another insightful webinar. I think also the number of participants and the number of questions that came in today showed the high interest, but also the thirst for information that is among you. And I hope that we could just shed some light on the requirements of the CSDDD. And I would like to echo what Michaela at some point said, that it makes sense to prepare ahead of time, to check your your due diligence processes now, make yourself familiar with the requirements. And I hope that today was just a great start, or another step, for many of you to understand. And we will continue with this series and make sure, to also keep you updated on what is going on in the regulatory environment. But then also, and I think, Valentina, I can already say that we have another session coming up in July on the 4th, where we want to talk about environmental due diligence. But we will keep you updated about this. And I wish everyone a good day, and thanks for participating today. Thank you.
Thank you very much. Bye.
Thanks very much.
Bye.